Sandeep Tandon, founder and CIO of Quant Mutual Fund, joining us this morning. Sandeep, thanks so much for taking the time. And let me start with a slightly broad-based question on the sentiment, because to a large extent, one can argue that the fundamentals of the Indian economy were strong even amidst this headwind or this sword of Damocles of the trade deal not being done and higher tariffs. Now that that is out of the way, is this most importantly a sentiment-driven up move that is supported by fundamentals?
So obviously it is the big booster. If you ask me, I think what was missing was this drive was completely missing. People were slightly pessimistic. The hope was lost. People have given up. Like today, somebody called me in the morning. He said, "I'm reaching office on time today after a long period of time." I'm just giving you a small perspective. People are slightly dejected. So obviously, what has changed? The mood has changed. The drive is back. Energy levels are back. So I think activity, if I have to define from market perspective, activity will come back. Today, let's say market has corrected in last many quarters or so. Less from the domestic selling, more from the lack of buying on the domestic side, which is one of the reason some of the domestic led companies has also corrected. It's not only the FIO own stock corrected, even domestic companies corrected. So this is a background. I think it's a constructive development. And it's not only about the US trade deal. If you really look at the EU trade deal happen and the bilateral talk which is going on with so many countries, so I think it's a very constructive approach that something has changed. And this is what we have gone through a small amount of pain for last many months. I always said our entrepreneur will emerge much more stronger if we go through this thing and we learn how to reduce the concentration risk on particular geography, and that's the case. And I think in going forward also entrepreneur will look into it. And if Europe deal, which is according to me is quite liberal and quite good, if that is the case, then we have very important market opening up from maybe if say from next year onwards.
Sandeep, I do know that you look at Rupee, you look at flows very closely as well. So does this tell you about the direction? And it can go one of two ways according to what people have said so far. At the very least, you'll have a cessation of outflows. But is there possibility of a turn in the tide?
So if you really look at, we were very early to talk about from last 2018 onward, rupee depreciation till 90 levels. So we have reached that 1992 mark sort of thing. My personal sense on multiple channel, we have said that how you look at rupee. A lot of people look at rupee is very weak. It is, yes, it has underperformed as compared to developed market as well as emerging market currency. But I look at not as a breakout phenomena. I look at as a peaking characteristic. Given the way Indian economy is growing, our contribution towards the crude related expenditure, which is there, is falling significantly. Overall macro picture is good. So I think rupee should appreciate going forward. And it's a good data point to talk about. It's a constructive background. And I think if let's say the rupee depreciated in last 6 months because of trade related challenges, and I think it worked very well for our export. From a strategy perspective, it was not good. But from the FPI perspective, that was not a great news. But what is very important to understand, don't look India still in isolation. What we have to look at on a relative basis, India macro picture was anyway good only. But because of demand supply situation, we were affected. What is very important for us now to understand that our predictive analytic indicators are indicating difficult time for the developed market, and India will be outlier in 2026. So India will be outperformer in 2026, irrespective of the absolute performance. So money flow on relative basis. So if region specific emerging market also, we are seeing signs of exhaustion. We are seeing signs of exhaustion in the US market. If that is the case, then money has potential with a lag effect to shift to India. And that is the trend which I will like to watch very closely. And that is our thesis, which is endorsing that we are moving in that direction. Money will actually come back to India, which has been missing for, let's say, for last many quarters or so.
Music to the ears. Sandeep Tandon, good morning. So what's the impact thereof? We are literally at the start of 2026, right? Sure, Jan has gone, but we're still at the start of 2026. I hear you say 2026, not in your words, but 2026 could be a banner year for Indian markets. So will India just outperform some of the other markets, or in isolation, India could have a year of very solid performance both on the equity markets as well as on the currency?
Thank you.
So what is important to understand, let's say if I have to talk about a year perspective, let's say beginning 2025 also this question came and market has corrected. I always said that by 31st January, December 2025 will be higher than 31st December 2024. Something similar if I have to say, I think by end of this year, India will be in positive territory, if not decisively up, but it will be meaningful up. And what is the way we have to play? This year is all about PE contraction year. We are calling it a PE contraction year globally. So you have to identify neglected, beaten down, where companies which are in neglected territories have good growth potential, and with the straight deal also getting benefit, GST benefit, income tax benefit, all those factors you have to keep in mind. See, if you really look at in last 2 3 years, particularly the new age company globally led by AI and everything has done very well. And because in India, the companies are very limited. So we have seen extraordinary hype getting created in few names. I think those anomalies will correct, and quality name company where earning potential is there will come back in the system. So I'm very optimistic on sector specific and stock specific rather than saying everything looks good to me.
You know, Sandeep, hi, Tamanna here. That's an important point. And even as we're feeling euphoric, triumphant, important to try and understand what could go wrong or what we need to look out for. Markets, of course, have cooled off. No one's complaining about a 600-point bump up on the Nifty, but they have cooled off. And we don't yet know the concessions which have been made, if any. The devil will be in the details. What will you be looking out for?
See, the first most important point is that sentiments. Okay, so we started the show with this. So sentiments has changed, which means the activity levels will move up. People participation will rise. People will become more constructive. People look for buying on dips as a thesis which India has been growing for last many years. I think that thesis has potential to come back. And what is more important from a FI perspective, rupee stabilize, macro picture becomes slightly more constructive, and we see some upgrade coming even on the earnings point of view. We strongly believe that September 2025 quarter earnings cycle has bottomed out. So quarter on quarter, you will see a gradual improvement. I'm not saying it is a very runaway move on the terms of earning. So you have to look at some of these factors, and I think which will attract flows. Okay, the key thing is the stability in rupee will be very, very vital to attract FPI flows. And some of the changes. Look, this is like sentiment booster. Even lot many institutions were slightly worried about deal is not going through. It was a more of a psychological barrier. No, it's not. Our export was badly affected. Yes, some sectors, some companies were badly affected, but not in general. So I think it's the way we look at totality rather than just looking at small pockets. I think sentiments wise, great news. Perception wise, obviously it will help. And I think what is more important to watch rupee closely. Our worry in India is not about Indian market. Our worry is more global. Our worry is developed market. Our worry is other emerging market. Our worry is actually dollar has a potential to spike. So that is something, because a lot of people have now taken for granted the de-dollarization thesis. We are a strong believer of de-dollarization from longer term perspective, but from a near term perspective, I think we have to watch this phenomena very closely, because this is the battle of supremacy between China and US. And in that context, relevance of dollar is becoming more and more important for US perspective. So we have to see very closely how it plays out. So that's the one risk. We are watching it very closely. It will not affect India up to that extent, because we have already been underperformer. We have been neglected territory for a while. So which is a good news. Anything which is any damage happens in the global equities or the emerging market, I think India should be beneficiary of that.
Absolutely. Sandeep, thank you so much for joining in. And I love the way you started your conversation saying that, people are feeling like getting up and going back to office and sitting in front of their trading screens after a while. I think it will show in the volumes as well, because you feel like the tide has changed. Sandeep Tandon there.